Today, we are digging into a quarterly report that really shook things up. Autodesk. They just delivered results that didn't just meet expectations, they completely blew them away, and in the process, totally reset the story around this stock. And what was the market's reaction? A huge 11.4% jump in after-hours trading. Now, a move that big tells you something pretty major just went down, something that probably caught a lot of people off guard. So let's break down exactly what happened here. We're going to look at the big numbers, get into the story behind them, and then figure out what it all means for what's next.
So the big question is, what on earth was in that report that sent the stock flying? Well, it all starts with the headline numbers.
And when we talk about the headline numbers, this wasn't just a simple beat. Nope, this was a clean sweep, a decisive win on every single metric that investors were watching. All right, take a look here. Revenue and earnings were solid. They came in comfortably ahead of what analysts were expecting. But that's not the real story. Look further down. Billings, up an incredible 36%. And even crazier, free cash flow just exploded, up 122%. I mean, these aren't just good numbers. They're screaming that this business has some serious momentum right now.
So where did all that momentum come from? Well, you're looking at it. The AECO segment, that's architecture, engineering, construction, and operations, was the powerhouse here. No question about it. It grew 23%, pulling in nearly $880 million. It just left every other part of the business in the dust. Okay, so the numbers look fantastic, but what's the story behind those numbers? This is where what management had to say on their earnings call becomes absolutely critical.
The CEO, Andrew Anagnost, laid it out plain and simple. Their strategy is not about chasing some generic one-size-fits-all AI. It's all about building industry-specific foundation models. What they're really doing is digging a competitive moat. They're basically saying that their deep, specialized knowledge in engineering and design gives their AI an edge that the other guys just can't replicate.
And that AECO growth engine we were just talking about, the CFO pointed out that it's being fueled by these really durable long-term trends. Think about the global build-out of data centers, huge infrastructure projects, new factories. This isn't just some temporary blip. This is a solid, resilient foundation of demand. And management isn't just talking a big game, they're backing it up with hard numbers. They raised their guidance for the entire year, across the board. Revenue, earnings per share, and most importantly, free cash flow, all got a boost. That shows some serious confidence in how the rest of the year is going to play out. And then, to top it all off, they announced they're speeding up their share buyback program. They're now targeting $1.2 to $1.3 billion for the year. That's a really clear signal to the market that they believe their own stock is undervalued, and they're committed to delivering that value right back to shareholders. So when you put it all together, the monster numbers, the confident guidance, it all leads to the most important part of this whole story, a complete and total reset of the narrative around this company. You really have to understand the context here. For months, this stock had this dark cloud hanging over it, these regulatory investigations into their accounting. Then, just days before this incredible earnings report, look what happens. On August 19th, the SEC closes its investigation. 2 days later, the U.S. Attorney's Office does the same. The timing here was just perfect. It completely cleared the air. So here's the bottom line. In the span of about 1 week, the entire conversation around Autodesk flipped. The market could finally stop worrying about all that accounting noise and focus on what really matters, their outstanding execution. That is the narrative reset that unlocked this whole rally. All right, time for the next call. Let's put on our analyst hats for a second. We know what happened, so where do we go from here? First, let's talk a little strategy. You've probably heard of a long straddle. It's an options play where you buy both a call option and a put option with the same strike price and expiration date. Basically, you don't care if the stock goes up or down, you're just betting that it's going to make a big move. You're betting on pure volatility. So, how could you position yourself for what might be coming next? Well, management was pretty direct. They're pointing to their upcoming Autodesk University and Investor Day events as the place where they'll be making some major AI announcements. The market is definitely expecting some fireworks. So here's a thought. It's a bold idea, but it's plausible. Step 1. You could execute that long-dated straddle on Autodesk, specifically to capture any volatility around these big AI events. Step 2. You could pair that with a short position in a competitor. Maybe a company that makes more generic, one-size-fits-all design software, one that doesn't have Autodesk's deep, specialized data. The thesis is simple. If Autodesk's AI strategy really hits, it could create a huge gap between them and everyone else. So, based on all this, our rating is outperform. You have a combination of a clean operational beat, raised guidance, that regulatory cloud is now gone, and there's a massive AI catalyst right around the corner. It all adds up to a really compelling bullish case for the stock. With the accounting issues in the rearview mirror and a clear AI catalyst ahead, the real question for the next quarter isn't just, can they beat again, but can their specialized AI strategy completely redefine this industry? Of course, this is all for educational purposes. This is not financial advice, so please make sure to do your own research.